This is the briefing for Friday, July 15th. Well, as I discussed in last night's briefing, the markets tend to spend most of their time in rotation. Now, we can see based on the longer term chart, this is the daily chart of the spiders, and I've been showing this for quite some time. These are the areas of rotation that we've been in. Now, depending on the time frame you're in, if you're in this time frame, this is an area of rotation. A greater degree time frame shows vertical development lower in this time frame, and then another rotation, vertical development higher, a rotation, vertical development lower, a rotation. So we can see that the market does spend most of its time in rotation, which is where we have been basically since the end of June. Now, as simple as we saw in yesterday's trading, the spiders tried to take out this lower extreme at 372 area, and it attempted actually twice to do that, and then rallied pretty significantly through the rest of the day, almost closing the gap from the previous day's trading. We had an intermarket divergence. This is the Qs, and you can see the Qs were not even close, so we could see that the indices were beginning to strengthen from an internal perspective. Also, we did not get a divergence in market breadth in the spiders, but we did get a slight divergence in the NASDAQ as breadth began to increase, or at least strengthen, as the market traded through the day. Now, if I bring this down into a little bit shorter time frame, you can see pretty clearly that we are in an area of rotation, and that means that the higher probability is for the rotation up, and I covered this in last night's briefing as well. So you can see we almost closed the gap here. We did close the gap in the Qs, and we closed at the high of the day in both indices. This suggests that Monday we will probably continue to go higher. So what this tells us, we have an area of rotation right through here on a day basis, or I should say an intraday basis, that gives us an area of good trade location. So we want to be long above today's high, and then short potentially below about the 382 area, and the same thing with this the Qs, short below about 289 and long above today's high right around the 291 area. But right now, and as I said in last night's briefing, that my probability assessment was that we were going to see rotation back through this range, mainly because this area has held for several different days. You can see 1, 2, 3, 4 days, maybe even 5 days that this 373 area has held. And then, of course, the divergence in between the Qs and the spiders suggested some type of strengthening within the indices themselves. This makes the upside resistance extremely important in terms of the next greater degree intermediate term time and price move. So right around the 390, 391 upside resistance in the spiders is extremely important, because breaking out of that and breaking out with strength would suggest we are transitioning into a greater degree time and price rally, and potentially that the low of June 17th, this low right through here in the indices, is potentially complete, and we're going to see a continuation of higher prices in the stock indices. So what happens here is just going to be extremely, extremely important if and when it is able to break through that area. If not, the higher probability once we reach that area or get close to it is for another rotation back to the downside. It's not unless we break out in one direction or another, supported by the market internals. In other words, volume beginning to increase and breadth confirming the move. So until that happens, until we test that area, or until we break out of it with confirmation of the internals, then the rotation that we've been in, this rotation goes all the way back to June 22nd. So you can see that right through there. It's pretty clear, pretty amazing to see what's happened here with the stock indices. Now, looking at where we are longer term, this is the area of rotation we've been looking at in the shorter term chart. Now, volume on the spiders today fell off, and that's still troubling. Total volume today ticked up just slightly, but overall volume is just really not confirming this rally. But if this is a corrective rally and completing another area of rotation, then we have to allow the market to complete its cycle of what it's doing. Volume in the Qs fell off also, and you can see the area of rotation right through here that we looked at on the shorter term chart. The Russell had an increase in volume, which is very interesting to see. So we had a slight tick up in volume in the Russell, and it's only about halfway through this area of balance, this area of pause that we've been looking at for quite some time. Now, we did reach a point of being overbought in the NYSE and not quite overbought in the Qs, or I should say the NASDAQ. But we're at a point where I think that because we closed at the high of the day, we'll probably see some follow through on Monday. But where we close on Monday is going to be extremely important. If we close lower than these lows right through here, then that's going to suggest that this is complete and we're going to see another rotation back down. At least that would be the higher probability. If we close higher, then that increases the probabilities that we're going up to test these upper extremes, which are extremely important. Looking at where we are in terms of volume, total volume, you can see it had a slight tick up in the NYSE, but still looking at where we are compared to other times, that we are still at an extremely low point in terms of volume, and NASDAQ volume fell off pretty dramatically. This is total volume for the NASDAQ. So while we saw a price increase that appeared to be strong because of the gap and then the pause, it's really not strong from an internal perspective. Market breadth was strong today. That brought us to the point of being overbought, but this does not preclude us from going higher in Monday's trading. Thing to watch for is if we get to an extreme overbought condition, then that would suggest some type of pause or some type of counter rotation back to the downside. Right now and going forward, this is extremely important in the stock indices. This area is just very, very important. What happens, especially if we attack or touch the upper extremes, is very, very critical, because if we break out in this time frame, then that suggests that we're breaking out and we're going to rotate back through this range, which would put the S&Ps, or the spiders I should say, at a point of testing the 420 level. So what happens Monday is just going to be very, very critical. Have a great weekend, and I'll pick this back up on Monday.